Hey everybody, happy Friday. Welcome back. It is 9:02 a.m. Eastern Time. August 23rd. Happy Friday. We have Jerome Powell at 10 a.m. for Jackson Hole. We have new home sales coming out at 10 a.m. as well. We also have another Fed speaker Harker at 11. This is day 2. I mean, we have all sorts of FOMC speakers today. That's weird. So Powell, Harker, Goolsby, is that Jackson Hole? Interview conducted by CNBC. Okay, so that's going to be all afternoon. Whatever. Interesting. Markets yesterday sold off a decent amount. Today they're bouncing back. This is the short-term recovery for the ES feed. So S&P E-mini futures, we bottomed out around 2 p.m. To 3 p.m. Eastern time, and spent the rest of the day returning to VWAP on the weekly. So we're back above on the daily, back above on the weekly. Markets looking like they're going to gap a little bit higher. Here is the SPY opening up around $3 and change higher. Let's see why. Higher pre-bell Friday's investors hope for dovish Powell comments. Well, hope and getting are two different things. So I would imagine, I don't know why the market expects so much out of Powell when the guy delivers the same type of message every single time. So let me see if we have some gamma levels. Try to keep an eye on things. SPY opening bell levels. All right. So what I see is a potential gamma squeeze down to 550. But if we're open up at 559, that'd be a huge disappointment. If we open up at 559 and we reject off this like 560 handle and then drop down to this larger magnet of price at 550. Now, for me to take a trade for today, I'm gonna have to see some crazy bearishness coming out of Powell's comments, or at least the market's reacting to that. So not sure. I don't know if the market's clawing back overnight because maybe the Fed watch tool changed a little bit. Maybe not. Probably not. I think there's still a 25 basis points cut expected. 73.5% for the 25 basis points cut. November, another 25 basis points, right? Yep, 25 basis points with a higher probability, around 51%. And then December. So the higher probability for December is a 50 basis points cut, which I don't know why that is the case, why that would be, faster pace than the other 2 months. And we still have a lot of data to get through before that September 18th meeting. If we go to probabilities, let's see here. So highest probability is a cut in September, and then one more cut in November, and then a two-bit. You can see the skip. So we go from cut, and then skipping to 50 basis points for December, which right now is sitting at a 44% probability, and then another cut, another cut, and then a pause in, looks like May, June of next year, and then another cut and pause through July and September. But as it stands, 3.25%, 3.5% by September of next year. That's what the market is looking at. It really just depends on if the Fed is cutting and will consistently stay cutting through the next, really it's next year. We're going into September 2024. This probabilities forecast is out to September 2025. But this is where we're at. This is what we're looking at. This is what we've been going back and forth on now for months. And, maybe Powell does provide a little bit of insight. So price action wise this morning, I will be watching. We're trading at 56.27 on futures. On the SPY, 559. Let me switch this back over. So let's go to the SPY here. 559.83. We have all-time highs at 565. We have yesterday's high around 563. So just within that little, bit of just nearly getting the all-time highs on the S&P. Take a look at the Qs. Qs had a red day. So far, red for the week. SPY is still hanging on to green for the week, but just barely. So we're going to see if we can cling to this 555 handle for the SPY. If we hang on to there, then we'll stay green for the week. But that would also be a large rejection candle. If this high to low from yesterday if we pop up here and then fill that gap, our candle is going to look something like this for the week. And I posted that yesterday in a YouTube video on TradingView. Let me open up my little editor here. So some potential pullback areas on the S&P and on the weekly time frame with the futures feed, a large wick to the bottom, and so far for the week a bit of a rejection candle. So I was of course wondering if this market continues to struggle to make highs, are we going to see something like this, where we have a low, we have a higher low, we have a high, we have a lower high, and we're going to have to tolerate some indecision trading here as we head into, September's trading, as we head into the election. I mean, what drama remains? Well, we do have a lot of data to get through. I'll just list it out here. So we have Jackson Hole with Powell today. We have Fed speakers today. I know next week we have NVIDIA earnings, and that's going to be 8/28. We also have US PCE, which is an inflation reading on 8/30, which should be Friday. The following week, we will have non-farm payroll. So we'll have non-farm, and then we'll have US CPI and PPI combo prior to the 18th. So all these things are happening. These are all printing before FOMC rate decision on the 18th. So, I mean, it's enough for the market to digest. I don't necessarily think this changes the outlook. If anything, the Fed just kind of stays in line with 25 basis points expected. But if we see, the CPI, PPI, and let's say unemployment claims on Thursday or non-farm is another a big miss. I mean, if the Fed cuts, I don't know. In my opinion, if the Fed cuts more than 25 basis points, if they go to a 50 basis points cut in September, it's going to show the market that they're behind. I don't think the market reaction is going to be great for that. So just my thoughts. Good morning, Gary. Good morning, Chris. Good morning, David. Morning, everybody. So that's where we're at right now. And that is what I'm watching. Let me take a look at, so pre-market levels. I will be watching 550. Like I said, if we gap open at 559, I doubt we're coming all the way to 550 today. Anything can happen, but that's pretty unlikely. That'd be a big move. We go to the Qs. My 477, my 475, those levels were hit this week. So that was a pretty nice read. And then as we go into pre-market, pre-market should be up on the Qs, up around, nearly $5. So we had a decent sell-off yesterday from 485 to 474. That's an $11 sell-off from top to bottom. Let's see where we are at for. So if we open up at 479, right in here, biggest gamma level that I see is around 474. That would be if we're opening up around this area and we have a gap fill today, could look at something along those lines. So I don't know. I'm curious, like, do I play a long put on QQQ or do I look at a butterfly to be not a broken wing, but just a straight up butterfly to see if price comes back within that level? A butterfly spread would look something like this. It'd be there's my risk, there's my reward, there's my risk, and I'd have a small debit. But if this price is, let's say, 474, and we start out at, if we start out at 480 and then work our way back into that level, there's a chance I could ramp that thing up and actually turn it into a nice little profit. So maybe not necessarily on the Qs, but if I did this on NDX and go, I don't know, maybe 10 wide versus 5 wide. I don't know. Or it's a lot easier just to either trade NQ or trade MNQ if I find a directional play, or QQQ just doing a at the money or even slightly out of the money long put if we're going to get price action that's going back down to this level. So these are all opening bell. These are all pre-market levels. I will be looking at this in real time. So this changes, and these start to kind of light up and fill up as more order flows and open interest changes during the day. Okay, Keo, good morning. How are you? All right. So that's where we're at right now. Let's go to the indexes, a little bit cleaner chart. So pretty big red candle yesterday, but chewing back into that today. We'll see if we just kind of stay inside that candle. Maybe that's the case. Maybe there's a lot of volatility today. I'm not really sure. I look at it this way. Next week is a brand new week of trading. If my SPX trade, I'm looking to see if we actually do push a little bit lower. We're at 55.70. I do have a 55.65 broken wing butterfly pin price that if that gets hit today, that gives me a chance to get into my profit peak. So these are all calls. And so my broken wing looks something like this. And this is 55.65. So I collected $1.50 in the tail credit. This would be roughly a I don't think it's a 10x actually. I think it's about a 3x. It's about a 3x on that because my spread's pretty tight. I'm only doing like a 5 by 10. So anyway, I'll be watching that level today. If we do have a slightly lower push, then that could be good for the SPX. If my RUT stays above, right now it's at 2150, and I need this week's expiration to stay above 2050. So we're trading at 2150 right now. This week's expiration is 2050 for broken wing butterfly. And again, that's a profit trap. We'd have to drop a lot today. But if we did, let's say we go to 2050 today. If we drop to 2050, that'd be at about a 4.5% move. And that would also get me into my profit peak. So either one, I just keep the income from the broken wing tail credit, or two, we have a huge drop to the downside, and possibly by the end of the day, I'm inside that profit trap for larger credit. But I'd be happy with somehow just having this thing keep the credit. And if my SPX can just come back into where it closed yesterday, that should be okay for some potential trap profit. All right. So that's where I'm at for that. We have had a slightly elevated VIX here the last couple of days. We bottomed out in one of the largest volatility crushes that we've seen ever, from 65 all the way back down to 14 and change. That was 1450 or so. That low I'm reading 1446. Yesterday we had a little bit more volatility up to 1806. We're trading at 1686 right now. I'd be interested to see if the VIX goes up to 20 to 30. If we're back into the 20s, it's pretty decent for some selling. We might have some larger daily trading ranges for futures. Good short-term opportunities for traders out there that trade futures. If you're active with kind of those intraday options, zero DTEs, things like that. That could work out pretty well. But if we're just going to stay, I don't know, maybe 15 to 20 is considered medium. I think the overall historical average of the VIX is like 17. So if it just stays there, that's somewhat elevated compared to where we were. But that's kind of par for the course. If we go to the dollar index holding green. Looks like we had this pullback on the backside of the trend line. So this to me looks like a little reversal pattern. This is what I talked about earlier in the week. So that is looking pretty good for a bull trade on the dollar. If you want to trade this textbook, we didn't actually take out the high, but if we get above 101.60, there's going to be some follow through on the USD. So if this dollar index continues to hold, now why would I say break the neckline? Because if we start going back down here, then we look to see if the bottom holds at 101 and then bounce back up. And then maybe this carves out the low and the dollar heads back higher. So we'll find out. But otherwise, I'm going to watch. Let me draw a trend line here. If we break above this trend line like so, we'll see if the dollar gets some bullishness. So break, retest. We break this neckline, measure some symmetry. Dollar comes back into this, maybe 102.25, 102.50 zone. So I can see the dollar getting at least a bounce in the near term. Oil, let's go back to the daily time frame. Oil responding nicely off the lows. We're clearly seeing some tests here for those bears, testing the lows, testing the lows, testing the lows. I'm not necessarily bullish on oil unless we come back to like 67 or 65, but something like that appears to be holding for right now. Now this could be again very choppy price action on oil. Maybe it works its way down into these support levels, and then we see a much bigger a much bigger demand zone, a much bigger buy zone. Like I said, 67.50 or so, $65. If it stays that choppy. Obviously, oil can be, quite slippery and quite volatile. I'm looking to buy low. I'm looking to sell high. In the middle, I'm really just trying to stay the heck out of it. I think there's a lot of noise in there. If we go to natural gas has turned over the last couple of days. I have a chart alarm set at 1.5. I'll probably end up taking some credit spreads on NG if we come back down and tap that chart alarm. Gold, 2503, still hanging in there, pretty supported, pretty quiet really, price action wise the last couple of days. Not a lot's happened outside of just poking a couple of all-time fresh highs, but we haven't had a big derailed gold move. It's really sideways. So gold might just kind of inch its way higher, maybe pausing for a little bit. Medium to long term, I'm still bullish on gold. Gold futures, same thing. Let me see if I can put in. I have an expiration next week, 2280. 2280 should be in pretty good shape. 2280 is down here below this low. We'd have to have a large drop off in gold by the 27th, which I think is next Tuesday. Let me check. Tuesday the 27th. Yeah, so that's an AM expiration for my gold futures contracts. Silver, same type of thing. My SI trades, I have an 827, 26 by 20 or 2625 by 26. That is just down below these levels here. And again, that's going to be Tuesday morning. And I have this out to September as well. Bitcoin up to 61, hanging in there. But, 69 to 70K resistance and potentially this $50,000 support. And we're looking at range bound trading on Bitcoin. Let's go copper. Copper potentially putting in a bit of a bottoming pattern. I've got copper positioned out here. I did a naked put that's hedged, so I've got -3 at the 3.2, and then I'm hedging that with 2.5 out of the money long calls, or long puts to take away some of the potential threat if we have like a vol event on copper. But it's just income for this trade. I would be a little bit more excited to get positioned on copper if we are coming back into. I like this kind of 3.4 to 3.2 zone, and look at a stop loss down below and see if copper gets a bid. If this is where the bottom is on copper, okay, that's interesting. I feel like I'm an old timey guy talking about the police. Like, yeah, copper. This low, this high. I don't think that. I mean, the bull market and copper, it was there. This is not really a bull market to me right now. I think this is consolidation, maybe accumulation. Maybe we have some type of structure in here that we can monitor and see copper give us, possibly a return to the highs. But the one thing that copper has to have, this was pretty good news on, global economy. And this was a, turn for China, turn for the dollar, or turn for the US economy, things slowing down. And that's why they call it Dr. Copper. So it tends to flow pretty well with what the global economy is doing. And I mean, I'm long from a much bigger time frame and levels that I think would have to be would give us plenty of room if those levels are threatened. But I don't know, if I see something in here that I like structure wise, I might also put in some near term trades and some credit spreads or something like that on HG. All right, Nikkei overnight. Nikkei overnight was a tiny little sliver of green. If we go to the, let's go currency strength. Japanese yen strength turned back to weakness. So Japanese yen's right at baseline. We have Aussie, New Zealand, and CAD on top. This looks like we have some risk on flows coming in this morning. So risk on this morning for right now. Look at this. We've got the Japanese yen is back to weaker. We have the dollar and Swiss also weaker. So for me, this does look to be more risk on trading for Friday. We'll see if the market's going to follow through with that or not. So if the the dollar, I mean the dollar may bounce, but it may bounce. I mean, to me, more risk on is Aussie, New Zealand heading towards the top of the food chain. If the Japanese yen stays in the middle or continues to go lower, it's just volatile. But if we go lower alongside the dollar and the Swiss, then I would definitely be leaning more towards, risk on currency pairs here, risk off currency pairs here, and that tone would be risk on overall. And I would look for futures to rally, get that ES feed back above the VWAP on the weekly. Look at the NQ. If we're back above the VWAP on the weekly, then I think there's short term opportunities to go long. So I'll be watching those gamma levels to the upside. So Nikkei's up. Japanese yen futures pretty mixed. I would look at something like this. We have this low, we have this high. Is it possible that the 6J feed high, low, lower high, lower low? I could see something like that happening where we have a harmonic pattern. This would essentially be the inverse of any Japanese yen pair. So if see this, like we have this swing, and then 1, 2, 3. If that creates a harmonic pattern, that'd be a Gartley. And then we'll look at any currency pair like Aussie yen, and we have a swing this way, 1, 2, 3. If we have that type of look on the Japanese yen, so let's say this is Aussie, I'll put AJ for Aussie yen, and then we have 6J for the futures feed. This would be, if we pull back deep enough, I'm looking for that to be the trade. And if we pull back deep enough on 6J, I'm looking for that to be the trade. So long 6J or short Aussie yen at some deeper pullback zones. I think that would make some sense on the yen pairs. So here's Aussie yen. So if it's up, okay, and maybe we don't really get the pullback here. Maybe we just pull back, high to low. I'm not drawing that very well. But if we go high to low and we're pulling back here and we just keep kind of grinding higher, I could see, a pullback in here and then maybe another push up, and we just have this like larger, deeper Gartley. So, and this harmonic stuff, they can be shifty. They can, it could be a Gartley. It could be, a crab pattern. It could be a shark pattern. It could be all sorts of, it's the same type of thing. You're using Fibonacci ratios and trying to find some level to, have a bit of a top, trade back to a harmonic merge, or actually have this thing be the entry that's going to continue lower. So time will tell. But these are big swings in the Japanese yen pairs. I think it's going to take a lot of effort to get back to the highs. I also think it's going to take a lot of effort to get back to the lows. And so just be prepared for some slow movement in here. Once we get to these major fibs and pullback zones, that's likely where I'm going to start looking to see how things roll over and confirm if we have additional yen strength and what that looks like going into September. September, again, historically not a great month for stocks. We talked about that this week right here. 70 plus years, okay, since 1948, September is, by far the worst performing month. Doesn't mean that it has to not happen or that it has to happen. But if I was expecting to see a downturn after we're sitting at all-time highs, it would make some sense that September is going to be a little bit lighter. Where the even 0.7%. I mean, it's not like it's doing a bunch of damage to the SPY. If we were down, 0.7%, okay, so we're down what, 5 points? I mean, if we're here and we're down 1%, we're looking at a move around 550. Now, do we go lower than that and then come back and settle in? Maybe. And then we have to figure out what October is gonna look like. So right now, here and now is Fed today with Powell at 10 o'clock, and then a couple Fed speakers. Jackson Hole finishing up for day 2. But market's going to be listening to every word Powell says. You can take a look at website financialjuice.com. See when Powell starts talking, what type of major headlines come out, what's being extracted from his speech. I'm sure it's going to be a very canned speech, as always. I would assume it's going to be very calculated. He's going to say exactly what's probably he's supposed to say. Dollar, all but flat ahead of Powell's speech. Set to be released, euro dollar. Trend higher remains strong. Okay, fine. Yeah. So anyway, I'll be watching that real time once things start to unfold. All right. Let's take a look here. Anything else? So I was doing some foreign markets. We left off the Nikkei. DAX is also up for the last couple of days. Is August 5th recovery? Do we take out all-time highs? Perhaps. I mean, we could also sit and do this. We could have, this sharp pullback, this recovery. If we have a little bit more of an accumulation phase in the DAX, then maybe that looks good to the upside for all-time highs. Maybe. FTSE, UK market, same type of thing. We're not at the highs, but is it possible that we are, this drop, this rally, and a little consolidation, and then we see what this market is made of, right? Consolidation that, this consolidation zone could be a healthy thing for the bulls to build and accumulate and show that the bears aren't able to take price lower, and then the breakout comes and we look at all-time highs. So obviously if the bears break down, then we look at equal lows. We will have trendline support, but I would just expect to see a little bit more choppy price action as opposed to just these constant rips and dips, and been a lot of volatility the last couple of weeks. So like to the point where things haven't happened like this. This is the last 3 weeks is a bit of an outlier where, we had the second largest move in the VIX ever. We had like the fifth, the fifth time ever that we got above 35 or 40 on the VIX. We had the largest volatility crush from the high at 65 all the way down to 14 and change. And here we are like, yeah, I guess volatility's over. I don't necessarily think that's the thing. Okay. So Daniel, good morning. How are you, man? Iris, good morning. So that's DAX and FTSE. HS. This is China. So Hang Seng, and we're hanging in there. I know that I'm sitting here with positions. Baidu for the week was down, and this was mostly my P&L in red yesterday from Baidu. I own shares of Baidu, so that's why it looked a little rough. I own the shares. My break evens are on 92. I'm just hanging in there for right now. I have 80 by 60 credit spreads. I'm willing to take some ownership of Baidu around 80. I have some ratio spreads. I think I'm trying to think. I get from the 80 by 60. I think I have like $3 or $4 on that credit spread. So I would be looking to own some more Baidu around 77 or so, and then I'd be pretty aggressive on repairing it. I took a fresh position yesterday on Zoom. We had a nice rip to the upside on Zoom. I did a calendar spread. I just started this towards March of 2025. We had a nice solid daily candle, and hopefully we will see additional upside here. This is a falling wedge formation. So to me, this is my profit target all the way back towards 85 to 90. And then same thing on PayPal. I've been patiently waiting PayPal to break above these highs around $68 to $70. We got up to 71, 72 yesterday. And again, if it's a falling wedge, this is going to be my profit target right around $100. So I did a calendar spread, which hopefully I timed that out far enough with March of 2025. And if we start to see, like kind of value tech, if you will, prove to be a move to the upside, that could be a good thing. So what I do here, yeah. So I bought the 55 long call. I sold the 85. My total debit's 1575. Did I take that trade? Oh, that trade's done. I took a small loss on that one. New trade is let me check. Put this one in yesterday. So I did PayPal a 57.50 long call, and I sold the 80. Gives me a break even around $75. So if it gets called away, it gets called away for $5 profit by October. And if that doesn't get called away, then I'll add another leg to it and try to lower my cost basis by another, maybe $1 or $2. Try to net some more profit. Pfizer. Just take a look at some stocks here. Pfizer's at $28.80. I have a $29 sell call on my calendar spread. I did roll that out to September 6th, which will give me an extra 30 cents of credit, which for my contracts would give me an extra $300 of profit if it gets called away at 29. I'd like to kind of finesse this where I can get it called away at $29.50, $30, $31, and just add to that bottom line move. I do have some expirations to manage today. Like I said, RUT and SPX, couple broken wing butterflies. I'll be looking for some short-term moves. It's 9:30 opening bell just kicked in. I'm going to wait and see if we have some levels that are lighting up. So the Qs, let's float this out here. So do we gap up and fill the gap? This is the 474. I'm going to chillax on this right now. Let me go to the SPY, see if there's any like outstanding contract size. So this is interesting. Like the SPY is way more tilted to the upside. We're looking to kind of hang in here at like 559 or 560, possibly getting up towards 565 to retest the highs today. I want to see if, look at my blue histogram. So the blue side is bullish, and it looks like that's a bigger draw for price right now. The call option is 55 to 0. So initially, the market's up, but if I see this starting to peel back and this starting to peel back and these starting to get bigger, if the bear side starts to fill up a little bit more, then I would be looking for price to fall and fill the gap and maybe even have a down day. So right now I don't like it right now. And also they're very opposing. I mean, I look at the SPY, it looks like the draw is going to be to the bullish side. If I look at the Qs, it looks like the draw is to the bearish side. So, which is what I've essentially been playing all week. I was long puts on the Qs and I was long calls on the SPY, and I took a break even on the SPY and then a small loss on the SPY, and I had several wins this week on the Qs by just going a little bit shorter. So, anywho, I will be watching to see how this one fills up. But if you're looking at a price point here, 474 on the Qs. If we take a look at, let's go back to this futures feed. I want to see what happens off this VWAP for the weekly. If price, comes back down here today and holds the VWAP trade, maybe looking at a bounce there for ES. But if we end up crashing through it and it gets rejected, same type of thing as just following this flow to see if we're above it, then I'm bullish, and if we're below it, then I'm bearish. And I'm just kind of waiting to see. And look, the market might be very quiet heading into Jackson Hole. So let me check one trade really quickly here. I got to log in to Tasty. Yep, I'm going to get this centered around SPX for right now. So SPX, we're trading around 5,600. That's a pretty good center price. See if I can squeeze out like 30, 40 bucks of profit prior to Powell's speech in about 30 minutes. Hopefully that is the case. Come on, Tasty. There we go. All right, so firing up the session here. There we go. There we go. All right, so SPX. So if I wanted to strangle this bad boy, I could look at the 15 delta there and look at I'll go 14 delta here, so 40 by 20. That's a pretty good amount of credit. We're at 26.1 on the IV rank, getting 430 to 440 credits pretty good. So let me go 0 DTE. Today is the 23rd, centered around 5,600, and looking to sell the 5,650 by 5,540. $4.45 credit, not too bad. So 4.45 times, looking at $66. So minus the credit, so a 378 debit. Okay. Not bad. All right, that's pretty good. And let's see if I can keep an eye on that. So Powell does speak at 10 a.m. I don't know if the market's going to immediately react to it. Hopefully that strangle can be showing some profit almost immediately. So actually I'm going to change that to 5605. A little bit better center price, 5605. Yep. Okay. Same legs on it overall, 440, 440 credit. I'll switch that just a smidge. 440 credit. Let me calculate my 15% again. 4.4 times 0.15 is 66. Same thing, minus 4.4. So 374 credit. All right, so 440 credit, 374 debit. That'd be 66 cents of profit. And I mean, it's been a pretty good win streak. I think there's like 13 or 14 winners in a row. 14 winners in a row for the last couple of weeks. Not too bad. But I'll be watching that closely, and hopefully there's some profit to be extracted prior to the 10 a.m. Jackson Hole. Okay. Dennis is looking for long in the NQ. Don't see it yet. Yeah, I could see. So this is my weekly VWAP. So I would be watching, right? Now look, this could also be the perfect rejection point too. I mean, we had a bounce there, and then we broke, retested, and rejected. So if we reject at this VWAP for the weekly, I could see, trend line break in here. If we don't really get above it, then yeah, if we turn south, we might have another retest of those lows on NQ today. So I would say it's got to prove it, right? I don't know, and I know you have your own style and stuff like that, but I'd want to see price above this for me to get long. So if we get above here and then we come back and retest, then maybe getting long with a tight stop. But if we end up getting a rejection here, I'd say this is a pretty clean trend line to be watching near term. So I mean, it's tricky, right? It's Friday, Jackson Hole. It's not really a news event. It's words, and we don't know when they're going to hit. We don't know if there's going to be a line in that speech that's going to be market moving. So I'm probably going to be a little bit lighter on the trades today, unless I find something really good and really clean. I've got a handful of trades I need to manage for today's expiration, but I'll just look and see what happens. So price is fairly sideways right now. Let me look at that strangle trade. So I'll check this thing in the next like 12 to 15 minutes, like prior to 10 o'clock. If it stays right where it is at 56.05, that should be easy to pull out hopefully $60, $70 profit. Okay. Any other charts you want me to go through? Mag 7s were all down yesterday. Netflix, is it Netflix? Meta's near the highs. That's the wrong chart. Never mind. Hang on. Let me go NQs. So NQ right there. ES is above the VWAP, but maybe using this to be a little bit noisy. What I have noticed is there seems to be a bit of a rotation from Nasdaq to S&P. I feel like the market is broadening out a little bit, so we can check that here. RSP is equal weighted, and wouldn't you know it, RSP has broadened out enough where the equal weight is actually at all-time highs. Okay, so we are at the highs, at the all-time highs for the equal weighted S&P, and if you go QQQE, this one, not quite. I want to say this is pulled back a little bit deeper than the QQQ, but we're still, noticeably off the highs by about 2.8%. But impressive rip for the equal weighted, 162 to 173. Did that perform better from this August 5th bottom? This is up around 6.8%. I don't think that it performed better. This is around 9.5% for the SPY, and the RSP is 6.6%. But this also is way less volatility. This high to low drop only was the drawdown about 6.5% versus close to 10%. Okay, Nimmer gaining some strength. What do you think? We'll reach $6 break even. I'm out of the EV space, man. I don't love this EV stuff. It does look like it's taken off here. I mean, we've broken the right side of the trend line. If I wanted to do something on Lucid, I probably wouldn't do something as far as owning shares. I would probably just have a put. I would just do a cash secured put and see if that just generates some income and I don't have to take any assignment. Your break even is what? $6? Yeah, I mean this level seems doable. That level seems doable, which is right around your break even point, right? So that's 555. That's 6. We get back to where this trend line break started. That's 8 and change. So yeah, we'll see. It definitely looks better than it did. So if we have a higher low, let me delete all this. If we have a higher low, and we start to see, maybe it's a channel for right now, but on a stock like this that maybe just needs a recovery, I like, that level to where this trend line started around $8. So yeah, hopefully get back. You have a take profit at 10. I personally like 8 better. I think 8 is a little bit more reachable than 10, but I mean 10 would be great. ABT, yeah, we can take a look at that one. ABT right there. So I don't remember. I think we just talked about this one for an earnings play. I don't think I took the trade. Sell the 102, buy the 97. That must have been is that right? 280. Trying to think of how I would have played this. Maybe I played this through earnings. I can look and see if I have a history on ABT, which I probably do. ABT activity. That was an earnings play. So where are we at on this right now? Medical. I mean, I do like the healthcare space. I mean, we're looking at strong buy, analyst ratings, and technicals. Let's take a look at snowflake analysis really quickly. Come on, SPX. What the heck? All right, let's go ABT. I mean, that checks a lot of boxes. Trading below estimated value, earnings forecast to grow, earnings are growing, pays reliable dividends, no risk detected, that's good. Let's see what price to earnings, 35.2, that's a little on the rich side compared to peers. But current price, fair value, got a little bit undervalued price action there from discounted cash flow. Not bad. Let's see what it is. So 35.2 versus Stryker versus Boston Scientific. Peer average 53.7 on the price to earnings. So that there's room to grow into that, which is good. I mean, can't ask for a better looking. I mean, this looks almost like a bank. I mean, decent dividend, value play, financially healthy, past performance is good. So yeah, I mean, I do like it. So let's see here. We go to the weekly time frame. I mean, 1.96 dividend is not super exciting, but I do think I don't know, maybe a ratio spread wouldn't be terrible. I kind of like this space here that if price stays above here, ratio spread, I mean, it's expensive enough where it's like I don't really want to take the shares, but I could do this on my margin accounts. That would be okay. Let me see what this level looks like. If I look at, let's say 93 to, let's go $90. If I was going to own it at 90 and we have a trend line way out here, something like that. If I own this at 90 plus, if I could do like a 95 by 90, let's see what that looks like. All right, so we'll go ABT, trade. Let's go out to maybe a ratio spread out here to November. If I want to own it at 90, could I do a 95 by 90? This is going to be essentially a break-even ratio spread, which I probably won't end up taking this trade. So that would give me 47 cents credit on one contract as opposed to like a wider credit spread. Let me see if I can get just a wider credit spread. If I wanted to say, okay, we're trading at 112. Delta wise, I mean, this is a 10 delta at 97.50. It's an 8 delta. It's just not great, right? Hang on a second. Let me go out to January. A little bit more here. Get 94 cents, 95 cents. This one might be a better ratio spread, maybe. So that's a 23 cent. Oops, I did this backwards. Hang on. So if I buy the 95 and I sell the 90, nope, 14 cents credit. I want more for ratio spread. If I did a wide credit spread, let's say I did like the 95 by 60. So I could get 75 cents here, but if I take any assignment, I'm going to own it at 94.25. Ideally, I'd like to own it, in the 90s or lower. But that's at least an income play. It's just not a ton of credit. That's a decent amount of risk. I don't know. I don't love that. I wish the options looked a little bit better, but to make $75 to risk $3,000, even if I took ownership to repair it, I don't know. That's not really taking enough away at the price that I would say I'm willing to own it. So I would probably have to go up higher. What would be like a 100 by 95? Let's flip these around. So if I buy the 100, sell the 95, but I sell 2 of the 95s, I just don't get a lot for it, unfortunately. I mean, ratio spreads I do like. If there's a stock that I want to own, I do like ratio spreads, but only getting 24 cents of credit. I mean, it's okay if I want to say that I'm going to own the shares. What this would help me do though is if price does drop and I would take an assignment at 95, I would actually get $5 on the bull or the bear put debit spread plus the extra 28 cents on the ratio spread. And so I would be assigned at 95, take away $5.28. I'd actually own the shares at $89.72. So if I wanted to own it at $90, that's how I can justify this. The problem is if the stock just goes higher, I'm tying up not a ton of buying power, depends on the account here, but I'm tying up buying power for a whopping 50 cents. So not my favorite. Overall, I do like, I don't know, maybe the best thing is on this stock is I just freaking buy it. I just allocate $1,000, buy it, take some partial shares, and then look to see if $1,000 gets to the highs. Let's say that we get to the highs. If we get to the highs, I make about $270. If I allocate $1,000 fractional shares, I make $270 on that. Return on capital is better. That's 27% return on capital, and I can keep that dollar cost averaging low. So, I mean, for checking some boxes, I actually think this is pretty solid. If we were to, dip lower, I can always dollar cost average it in this. So the high to low right there was a pullback of around 37%. Highs around 142. This thing had fair market value said 125, I believe. 125 fair value. Let's see what that growth looks like again. Forecast to grow 11.78 per year, trading below estimated value. Earnings grew, pays reliable dividend, good value, checks a lot of boxes. I mean, it's good. So yeah, if I like ABT, I think options are always my first priority, but I don't like how they set up where I couldn't necessarily own it enough or get the income for it. Plus, it's going to tie up for 100 shares. I just think that's too much. I mean, I'd rather just put in $1,000 or $2,000. Allocate 1%. I mean, $2,000 is a 1% risk for me, or roughly just shy of that. And if it gets to the highs again, I'd make about $500. That return on capital is a little bit better for me. So I think I'll do that. Yeah, I'll take the trade. I'm gonna see how my SPX is doing. SPX, did it take profit already? Hang on a second. We're still staying at the same level, 56.50 and 55.40. So price hasn't budged in 20 minutes at the open. We're at the exact same price I centered around, and my credit is still at 440 to 445. Something, I don't know. I really don't want to be sitting on that strangle through Jackson Hole's or at least Powell's speech if it starts to move things around. Anyway, while we're at it, let me get to ABT up here. Keith, I see your request there. Euro yen, Euro Swiss. Euro yen, Euro Swiss short and long term. Okay, sure. I'll take a look. All right, I'm going to get some Abbott in here. So let me go ABT. So I'm going to put in 2K. So if I go long stock, we're at 112. Let me do the math here. I'm going to put in a 2K position. So if we're at $2,000 divided by 112, looking at about 17 to 18 shares. So I'll do since position one is this case, I do 17 shares at 112.05. Let me see if I can get a little bit less than that. Maybe I can get in for like 112 on the nose. So 112. Bought it at 112. That's 17 shares. So 17 times 112 puts me at around $1,900. So that's just shy of a 1% allocation. And similar, let's go. Buying power looks good for everyone, 9732. So that account, fill. See if I get fudge. 112.10. Come on, you turds. 112.13. Filled at 13. Price is being a little bit slippery today. 14. 15. All right, filled at 15. 9151. And I think I'm good on that. I'm going to keep it in the, so these are all margin accounts right here. So margin to margin. So 1, 2, 3, 4. They'll take a 2K position on ABT. I'm going to go ahead and just set a take profit. So up here, 142. I'm going to go 140. Let's see what that high is. So if we get to these highs, that is around 142.50. I'm just going to set a take profit on that. So ABT. Close. 142.50, good till canceled. Okay. $142.50. $142.50. And $142.50. Okay, so that way limit orders are set. Buy at 112.15 and take profit up here. Alrighty. I am going to go ahead and wrap up here. I think I'm joining the A1 trading team at the top of the hour. Pretty sure. Let me double check that. 10:15 they said. All right, I've got a little bit more time here. Let me go Euro Yen, Euro Swiss. And let me go back to the SPY SPX combo. Still hanging in there at the same price, 445 credit. Come on, man. I don't know if we have like a slightly higher implied volatility this morning with Powell on tap at 10 a.m., but it hasn't budged. So I'm just gonna sit and wait. But by probably 10:30, 11 o'clock, I'm looking to close out that strangle. All right, so Euro Swiss, that was Keith's question, right? Okay, Euro Yen, Euro Swiss. Euro Yen, let's go down to a daily time frame. So I did take a buy trade this week on the Euro Yen in the Flex room. So I did it right here. I put in a buy at 162.69, which is on the backside of the trend line. My stop was below 161.20, which is down here. So I'm looking to see if there's a little bit more upside to find this 5.0 zone. This is my 5.0 pullback zone right here. So I took a buy trade. My stop loss is just below this. I'm looking to see if we just make our way back up to the 5.0. So looking at a little bit of asymmetry from, higher reward than risk. I'm going after a little swing scalp on the Euro Yen. Euro Swiss, I feel like if you've been following me for the last couple of years, you know my outlook on the Euro Swiss. I got in at the lows. I mean, once I was in here at this trend line break. I was in here on this trend line break. I was in here at equal lows. I was in here at equal lows. I'm looking to see if this pair will make another move. So if we go like low to high, pull back here, I mean, the bigger breakout's going to be, we have to break this trend line. If you want to be really bullish on Euro Swiss, we got to break this trend line. So the easy open space trade is going to be out here. If we don't get that move, then obviously I'm trying to, guess at the bottoms right now. But this to me looks like a pretty solid level to be support, even if it trades back to the range highs around 99. I'm just hanging in there, staying pretty patient. But if I'm going to add more to my Euro Swiss longs, it'd have to be right there. I'm not short. I'm currently long. I'm enjoying some positive swap. I like this potential double bottom. We're at 20, 30-year lows on this currency pair. So I'm just going to ride out some of these downward moves, looking to see if we can establish a range or a correction to the upside. But what I'd be looking for is if we have a high pullback, we look at an aggressive trend line here, or just wait for the trend line to break and go. So to me, this is either break above this high and get long towards the 99 high, or get a break of the trend line, get a retest of the trend line, and then get long that way. So if you wait a little bit longer on Euro Swiss, I think it looks better. If it comes back down to the lows again, that might be a bargain to take a small stab at this. And maybe this sets up a divergent bottom, and then comes back up here with a bullish pattern, and then we can trade that all the way back to the highs. But either way, if this is a low and this forms a low, I'm still going to be bullish towards my 99, 99.50 target. Does that help? Okay. That's it for right now. So I've got a little bit of extraction out of that. Nope, it's about the same, 440. Dadgum, it won't move. All right. Gamma levels wise, and looking at the QQQ, still filling up that 474 level. It's getting a little bit larger. I'm not going to buy. I'm not buying a put, not yet. I just think price action today is going to be a little dicey. I have no idea what's going to happen with the speech and everything. So SPY, we gapped higher. I mean, it's just interesting, right? Like we gapped higher on both. The SPY's all looking for bullishness to retest. I mean, this gamma level's all the way up here towards 565, which is the all-time high. And then the bearish side is pretty much absent right now. So I don't know. I mean, this could be a, let's change the color here. This could be sideways that just kind of gets the bid up here, and we're checking this thing at all-time highs, or this with the high yesterday that pushed it down. We come back in, we stall, and then we fill a gap, and then maybe start filling up some of these gamma levels as the Qs maybe dips a little bit lower too. So, all right, it is 10 o'clock. I don't know if the market's looking for Jackson Hole right now, but initially we're starting to see some bullishness. And let me see if we have some headlines. Home sales came out, actual versus forecast. So I think we have a few more. That should be a positive print there for home sales, right? Yep. So home sales 739K versus 624. That's actually pretty impressive. Any revision on that? No. Okay, and I don't see anything out of Powell yet. The time has come for policy to adjust. Okay. We're right back to that weekly view up on the Nasdaq. Here is ES. We're right above it. I mean, I'm watching the SPY. Look, I'm watching the SPY here, heading up towards 565. That was my long call all week. I was trying to get up there. If this is, I mean, starting to fill up here. That's already 120. Like the current net, you see that thing ripping up there. So that value is changing. 461, 465, 461, 465. See if that gets any bigger. So what's a 565 today? It's not going to be super expensive. I think this is more of a, I don't know, maybe hypothetical. I mean, I don't know if I'm going to take the trade for a 0 DT today. I'll look at the price. So if I looked at a 565 today, it's going to cost me 46 cents. that if we rip there fast enough, then that 46 cents might be, worth $1.60 or so. Right now it's trade, so it's already up 10 cents as I'm staring at it. Super price sensitive. Let's see, 57 cents. Let me see if I get filled for 60 cents. So 65, 66 oscillating there. Let's see here. 59 cents. I don't know, man. I'm just gonna chill for today. I've got some other stuff to manage. If we're getting a rip to the upside, there's other profits to be made. We're sitting right on the cusp of this VWAP on futures, so ES and NQ. Right below it on NQ, right at it on ES. SPX, a little bit of directional play for the day, but starting to fade a little bit. Right, starting to fade just a little bit. So I'm not going to chase this thing today. I've got plenty of fresh trades next week. Also, let me see one thing before I switch over. I know we went a little bit long today. Um, Interesting. So we're in my profit peak with this trade that I was looking at from Monday morning. I closed it out Tuesday morning for about $1.50, between $1.50 $1.75, and it still maintained a lot of that value where it's up about $4. It was the optimum. This was crazy. Like yesterday, the real price was here yesterday, but this was trading for about $22 and change yesterday, even though it was actually closer to my center price. This time, it's actually beyond my first center peak. I mean, it's still maintained, 350, 350 a profit, which is good. If it gets up somehow higher, I'm curious what that looks like. So I'm just going to keep monitoring this one, but I do love this trade. All right, let's go back here. So I'm not going to chase the short-term stuff today. And I do know that a SPY put today at the 565 put, or I'm sorry, the 565 call is like 60 cents, but I'm not going to chase that thing. We'll see what price gives us today. Let's see if there's anything else from. Oh boy, there's lots of stuff here. We do not seek or welcome further cooling in labor market conditions. Okay, good to know. Few policy rate. What the hell is that? Policy rate level gives ample room to respond to risks, including an unwelcome further weakening in the labor market. Add bets on Fed cuts after Fed chair Powell's remarks. Confidence is growing that inflation is a sustainable path back to 2%. Labor market cooling is unmistakable. We're no longer overheated. Inflation has declined significantly. We're now much closer to the goal. I mean, probably because we have shelter. I mean, shelter's been such a sticky, lagging. It's lagging, but it's sticky, and that's why the inflation CPI prints have been higher. And then you've got food and energy prices as well. They don't like to consider. Balanced risk in our mandates have changed. Upside risk to inflation is diminished. Downside risk to employment has increased. Swaps are steady, pricing in 100 bips of easing by the year end. So that would be 25, 25, and 50 then, if that's what the market's looking at. So, I mean, I don't know. In this tone, by the way, take it for what it is. I don't know what the market's going to do, and I'm watching price just like everybody else. But it seems like right now, as far as the importance of what the Fed's talking about, inflation. Let's just draw like a little seesaw here. Okay, it was all about inflation, right? And this would be employment. But now it's switched. Now it's the other way. Now the market, or now the Fed at least, I mean, everything they're talking about right here is way more about employment. Confidence is growing. Inflation is a sustainable path. Labor market is cooling, is unmistakable, no longer overheated. So it's all switched to focus on employment numbers. So anyway, all right, I'm going to run. Let's take a small break. I'll be back. If you want to come in for another session, I'll be live with A1 Trading, Nick Sayek and team at 10:15. So I'll push for another session at 10:15. Just come back onto the channel. Okay, so we'll take a small break, and we'll be back at 10:15 a.m. Eastern Time. All right, cool.